Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, November 3rd, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Well, quite a week we had in the market this past week. We talked last week about V bottoms. We talked about creating resistance and support at certain levels before the market moved up, and we got a V bottom. Not unprecedented in the overall market. Quite a week that we had, looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000 in that order. We see nothing but positive numbers, and look at these percent changes for the week. Dow up 2.6%, up 1.4% year to date. All of a sudden, we're getting all that we had before. It's coming back. NASDAQ up 5.3%. And year-to-date percentage 7.4%. S&P a week of 4.1% up and 6.3% for the year. Russell 2000 up 3.4%, down still right around 4% for the year. Russell 2000 being hurt more than any of them. We can expect to have all new time highs by the end of the year. That would be my expectations. Of course, nothing that I have to say is written in gold, but we've got a V bottom. We may have a bit of a trace back, but we had quite an interesting time in the overall market. Economic announcements coming up for the coming week. We've got PMI coming on Monday, November 3rd. We have ISM manufacturing at 10 o'clock, construction spending at 10 o'clock of interest to the market, PMI being most of that interest. Looking at Tuesday, November 4th, we got the factory orders coming in at 10 a.m. We have international trade at 8:30. As we look at November 5th at the beginning of a new month, we see that we got ADP employment report coming out at 8:15, and we have not much else taking place during the rest of the day until we get to 10 o'clock where we have ISM non-manufacturing index. Looking at Thursday, November 6th, every Thursday morning we have jobless claims, and there they are. Productivity and costs at 8:30, and not much else showing for the rest of the day. Friday, November 7th, as all first weeks after the close of the month, we have the employment situation for last month coming out at 8:30, and we have consumer credit, which probably will not move the market at all on Friday. Employment situation being the big number for the week. All right, finally, taking a look at the SPX. Look at how far the SPX dipped down below the 200-day moving average, which is sitting right there. We see these dips, and they take place every now and then. The last one was November of 2012, and the catalyst for this decline took place, which we call this a waterfall decline. Took place a lot of things going on. We got the confluence of Ebola outbreak fears, political protests in Hong Kong. We had information coming out of Russia and Ukraine with political military maneuvering. And we see ISIS causing problems throughout that part of the world. Sharply slowing global growth being talked about in China and some of the other major countries. So all of a sudden, the market decided to pull back, and all those bulls decided to become bears, and back up did the market do. Now, most of the time what we see some kind of support level being built at the bottom. None of the major indexes except for the Russell 2000 went down more than 12%. But we normally see some kind of support level taking place, and then we see the market rebounding. Well, so what we got here was that classic V, which takes place every now and then. And we're back up at a resistance point at this very juncture. We'll see whether we get some kind of a pullback here, which would kind of be normal after that much of a move, and then our move back up. Could it pull back to that previous low and test that? It sure could, but we certainly don't expect that in the best 6 months of the year. So overall, the market had a bit of a strong pullback, provided opportunities for those of you that were risk takers and decided to jump in when we started getting positive numbers down here at the bottom. Remember, this had good good volume on it too. So we had signs technically that we had a move going up. I can honestly say I did not expect this big V, but I do expect new highs by the end of the year. Looking at the SPX for the week, all we can say is it just continued right on up. No pullback, no hesitation, nothing taking place. It just wanted to go up, and the buyers stepped right back into the market, showing that that underlying demand is there. Looking at the NASDAQ, which was the strongest of all the indexes, we see exactly the same formation. We see the waterfall decline, the V uptake, and we'll see if we get a bit of a pullback at some point along here before we get to that all-time high, which is sitting right up in there. All right, so quite a week in the market as we saw the continuation of the uptrend as the buyers stepped back in and forced getting back in this market again, as I said, for the best 6 months of the year. Looking at the Russell 2000, the weak sister of all of it, we see that the Russell 2000 really showed a deep V. Just kept going down and down and down and told us that this was coming. Remember, we talked to be many times about how the Russell 2000 can be an indicator of when we're going to have a little bit of a market change, and then we saw this nice increase again, V bottom out of the Russell 2000, still sitting in negative numbers for the year. The VIX, well, VIX did exactly what we expected to do. A lot of fear came in the market. We're up about 30. There's still a little more fear in the market than traditionally we've been seeing for the last couple of years, as the VIX, with this big uptake that we've had in the market, is still sitting at around 16. So for those of you that are option investors, you know how to take advantage of this premium. And if you don't, talk to Options University, and we certainly can give you some education concerning this. Looking at the bond market, we see that the bond market spiked. Now, with the overall market, had a big tip-off that this was coming to an end when we see that kind of volume taking place, and bond market pulled back. But the truly bullish market of all this has been the bond market, which has shown us quite a move up during the last couple years. Looking at gold, we did see some movement into gold as the overall market came back. A little bit of a surprise that we wouldn't call this a flight to safety here, but the gold market definitely pulled back up, sitting right around its 30-day moving average at this point, recovering to the same levels that it was at before. Looking at the volume, I talked about how we had a volume spike at the bottom. That's exactly what you expect to see as you see an exhaustion move, and that's exactly what happened. The big surprise for many of the technical investors is that we got this sharp uprise without any pullback and any real layout and laying in any kind of support level. All right, looking at the financials, looks just like the overall market, headed back to previous highs, sitting at the 30-day moving average. There's an ETF that shows you what the overall market's doing. Oil, latest decline hasn't even begun to rebound as the oil world seems to be changing in spite of the fact of ISIS and the Middle East problems going on. And so for those of you that are gold members, stick around. We got stocks to watch. And if for those of you that like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. For the rest of you, thank you for being here. This is Market Forecast brought to you by Options University. It's Butch Shorak. It's Monday, November 3rd, 2014. And talk to you next Monday. And thank you for being here.